What's a reverse mortgage, and is it something that you should get? That's the topic for today's episode, and without further ado, let's dive in. Hello everyone, and welcome back to another episode. For those who are tuning in for the first time, this is your channel for real estate education. So today's episode is actually thanks to one of my subscribers who asked me a question about reverse mortgages. And at the same time, I realized that I've been getting a lot of comments from you who are more on the senior side, and you were looking to explore something a little bit more passive, something that will be more accommodating to the stage in your life that you're currently in. So I'm happy to say that I decided to create this episode on reverse mortgages, and let's just dive in to see what they're about. So a reverse mortgage, it's only available to people who are 62 years old and up, right? And the way it works is that it is a mortgage, but instead of you making monthly payments to the bank, what ends up happening is that the bank is going to make payments to you. Yes, that's right. So the way it works is, let's say you are about to hit retirement, or that you are currently in retirement and you wanted to get additional money using your property as collateral, right? So you have your house right here. One of the requisites that you need to meet is that the house has to be fully paid, right? So fully paid or close to being fully paid. So you have to have, let's say, a good chunk of equity available in your property in order to qualify for this type of mortgage, right? Then another criteria, another requisite that you need to meet is that you have to reside in the property, right? So you have to reside there. And the way it works, right? Let's say, for example, that the bank or you walk into a bank and you say, hey, I would like to do a reverse mortgage, right? So what they're gonna do, the bank, is that they're gonna do an appraisal, right? They're gonna see what's the market value of your property as of today, right? And then once they get that back in, they were going to go through an assessment, they're going to evaluate your current situation, and then they're going to decide, okay, we're willing to lend you, let's say, for example, $100,000, right? So you're getting $100,000 worth of a mortgage. And instead of you having to pay money on this mortgage, you get to decide how you can actually receive that money. So you can do it in a lump sum, you can receive that on a monthly payment, and that's something we're gonna cover more in detail ahead of this video. So let's say for example purposes, you decide to take the monthly payment, right? So the way it's gonna work, let's say it's January and you're receiving $1,000, it's February and then you're getting another 1,000, March, then you're receiving another 1,000, and so on, right? So for every 1,000 you get, that means you have 99,000 left in your mortgage, and then the following month it goes down to 98K, and then 97K, and so on, right? And then for every amount of money that you receive every month, right, you will have to pay interest, but the interest are not coming out of your pocket. What happens with those interests is that they get added back into the loan. So you're just basically receiving the money for whatever use you want to do it, whether it's for your daily expenses, for that emergency. And then the way the interests get added up, it's, back to whatever amount of money you own. Now, you might be wondering, okay, so everything gets added, but then what's gonna happen? The mortgage is gonna keep growing, right? Yes, that is correct, but these type of mortgages, just like any other mortgage in the US, it's highly regulated, right? So one of the requisites that the government has is that whatever the amount that you still owe plus interest should not exceed the original value of the loan. So whatever amount of money you keep adding back to the loan, it just simply cannot exceed that. So typically it will happen if, let's say, you live longer than expected, you live longer than the term, and you just continue to receive money, the interest rates are gonna get added back up, so that way the loan is gonna continue to grow. Another way that this could happen, right, is that, let's say, for example, another crisis takes place, like the one in 2008, and your property could tremendously drop down in value in comparison to the amount of money that you took out. So now that you understand that, you probably might be wondering, okay, that's great, but then what happens to the loan, right? Like, I continue to receive money, but I obviously know that the loan keeps growing and growing with interest rate. So two things could happen, right? You can choose to move out of the property and therefore you have to sell the property in order to use the proceeds to pay back the loan, or you just simply pass away and then you make arrangements beforehand to have the property sold, and then the bank is gonna get back their payments that they issued you during the time that you were alive. So now you might be wondering, okay, that sounds interesting. I wanna learn a little bit more. So how exactly do I get paid with that mortgage? How exactly do I receive money by leveraging this type of mortgages? So one of the ways that you can get paid and you can negotiate with the bank is by receiving a lump sum, right? So this is actually very similar to a cash out refi in the sense that you get all the money in one shot, with the difference is that with a cash out refi, you have to repay the money back. And with a reverse mortgage, you don't. You do that after you move out of the property or after you have passed away. And then if you don't know what a cash out refi is, don't worry. I'm gonna leave you a link down below here in the description so you can check it out at a later time. But in the meantime, stick with me for a sec. The second way you can choose to receive that money from the mortgage is through an annuity, right? You're just gonna receive money indefinitely until you decide to stop. You decide to stop by either moving out of the property or you just once again, passed away, and then you left everything set up so that way either your hers or whoever is it that you choose to take care of the property afterwards can sell the house and then use the proceed from the sale and then just repay this loan. Another way you can choose to get paid is through a line of credit, right? So a line of credit works very similar to a HELOC. So let's say, for example, you agree with the bank that your house is worth $100,000 and then the bank is willing to lend you $100,000, but you have that as a line of credit. You don't take the money right away, but you know it's there available for you. So it's very similar, only that once again, you have to repay that money back as soon as you get the money. And here with a line of credit with a reverse mortgage, you don't, but you do it, afterwards. Then the next way you can choose to get paid is through a term agreement, right? So you can select, hey, I want to get paid for the next 10 years or for the next 15 years. And that's something that, it gets capped based on whatever amount of time you choose to get paid. Then 5 and 6 is just simply a combination. You can choose to have a line of credit and monthly payments until you just decide to stop, or you can choose to have term payments and a line of credit as a way to get payments. That sounds great, but how do I know whether that's something that's suitable for me or not? And my answer to you is, I don't know. Only you know your situation. My goal here is to basically inform you that this type of product is available and that, hey, you can choose to pursue something like this or not. But typically what I like to do is to ask you to actually evaluate your situation and see, okay, I need money, right? But how much is it that I truly need exactly? And do I really want to go through something as invasive as getting another mortgage? Or is it something that I can take care of with maybe a personal loan or maybe borrowing money from families, or perhaps applying for a credit card if the amount of money that you need is actually relatively small compared to something as big as a mortgage. But if in the end you decide that this is something you definitely want to pursue because maybe your needs, your monetary needs are actually bigger than that, then you should consider the following. And if you're liking what you see so far, make sure you hit the like button right here so that way you can help this channel rank and also make this information available to other people like you who are actually seeking to educate themselves. So back into this board, if you were to pursue a reverse mortgage, then you have to take into consideration the interest rates, right? Never forget about the interest rates. And then the next thing that you might want to take into consideration are closing costs, right? And of course, the mortgage origination costs. Because like I said, in the end, this is a mortgage and therefore it can become something that is very invasive. And the last thing you also have to take into consideration is to beware of scams. So there are a lot of people out there trying to take advantage of senior people because maybe they see that they're in a desperate situation, or they just simply, they like to rob people out of their money and the equity of their property. So what I decided to do is that I went online and I went straight to the source, and I'm gonna share that information with you so that way you know that when in doubt, when to exactly call, so you can get clarification on that and check out whether they're trying to scam you or not. And also a list of banks that are actually approved by that organization, so that way you know that in the event that you choose to pursue one of these mortgages, you know exactly who to work with, so that way you are placing yourself in the best hands as possible. So now let's just go into my computer so you can actually check that out. And here we are inside of my screen, and the first thing I wanted to show you is this website right here, and that is the National Reverse Mortgage Lenders Association. This is the go-to page for you to find out anything that's related about reverse mortgages, right? They have lots and lots of resources that you can definitely check out, and when in doubt, whether you're dealing with a scammer or not, this is also the right page for you to come in and find out about any announcements that they might have. Now, there's one tab in particular that I wanted to show you, and that's their vendor directory. So their vendor directory, it's basically a list of all the members who provide vital services to reverse mortgage lenders. So amongst them is First National Reverse Mortgage. They also have attorneys and title agencies that they have endorsed and work with them. So in the event that you definitely want to check out what they provide, then just come here and visit their vendor directory, and you're gonna get lots and lots of options right here. Now, in terms of banks that you can actually work with to get access to those type of loans, so you have Nations Reverse Mortgage, and that is their homepage right here. So you can definitely come in and visit this, and don't worry, once again, I'm going to leave you the links down in the description below, so you can actually check out those websites in your own time and see how actually they work and their FAQs. So you can read all of this at your own time, and then once you are ready and you want to take on the next step, you can feel free to also give them a call to maybe clarify some of the additional questions that you might have. So that is one lender, and another one is the American Advisory Group, and that's the page right here. They also have a 1-800 number that you can actually reach out and ask questions. And the reason why you're seeing this big screen right here asking about the zip code, it's because we live in 50 states, right? And then each state, it's governed by different rules and regulations, and the local needs are actually different as well. So they want to make sure they can be as accommodating as possible, and therefore, in order for you to find out what kind of products they have, you should definitely enter your zip code and figure out, okay, what is it that they have to offer you. Now, the next lender you can actually work with is One Reverse Mortgage, and they are actually a Quicken Loan company. So let me just zoom in a little bit more, and as you can see, this is a fully loaded page filled with resources. They even have a calculator, reviews, they have a free info kit. It's been featured in the Wall Street Journal. So definitely a great page. They have a blog, they have a YouTube channel as well, in the event that you want to learn a little bit more about them before reaching out and taking that big step, right? And then the last lender I found, it's Liberty Home Equity as well. They offer this type of mortgage as well. And here is their eligibility calculator. So you can check out the About Us page, what they do, meet their client for senior clients, wholesale partners, personal stories. So you can definitely educate yourself more in the subject before you even reach out to them and learn more and see whether this type of products is the right fit for you. So if you like what you're seeing so far, do not forget to hit the like button right now before we get back out of the screen. I'll see you guys outside. And that's it. That's all I have prepared for you today. Hopefully that was an informative episode, and it will give you more options than you thought you had. And while I still have you here, for those who are actually wondering what a cash out refi or a HELOC is, I picked an episode right here just for you, so you can actually check it out and continue to educate yourself in this subject. So once again, that's all I have for you today. And until then, I'll see you guys next time. Take care. Bye-bye.